Joining us in the studio today, we have with us Yang Jun-sok, Professor of Economics at the Catholic University of Korea. It's good to have you with us here today.
Happy to be here.
So officials from Washington and Beijing held talks over the last 2 days, and it seems to have gone quite well. What were they trying to work out, and what progress do you think was made?
Okay, well, the easy issues have already worked out in the lower level meetings. Those include issues like China buying more U.S. products and China agreeing to reduce the U.S.-China trade deficit in principle, though it's not quite sure how they're going to manage to do that. And then more freedom and more rights given to U.S. firms operating in China, as well as tougher enforcement of existing intellectual property protection laws in China. So those issues have been worked out. What's remaining has to do, as the story just said, has to do with the longer term, more structural, longer policy development issues. For example, forced technology transfers by Chinese companies on foreign companies, including the Americans, subsidies to state-owned enterprises, Belt and Road Initiative, Made in China 2025 program, where they're trying to advance their manufacturing sector and upgrade their technology, overcapacity in certain industries like steel, and then this is probably going to be the biggest sticking point, but timetable for enforcement and verification. I think a lot of Chinese government officials, as well as even the Chinese public, think that that's allowing a bit too much for America because, well, it's not only limiting the freedom of Chinese policy, but they're going to have approval over it. So those are still issues remaining, and those are not easily solvable issues.
President Trump did speak of these talks that just happened in glowing terms, but as you said, there were difficulties, and he stressed that any deal right now has yet to be finally reached, and that he said he would need to perhaps meet with Xi Jinping to make the deal go through. But at the moment, there's been no date set for this meeting, and he also stressed that he would only accept a big deal with China. What does this mean by a big deal, and do you think they're close to getting it?
Okay, well, typically what happens in these trade negotiations with a deadline is that they solve all the easier problems first, which they did, and then they both sides hunker down on few very important issues, and they play a game of chicken. So they both try to outweigh each other, try to just make the issues more critical, more bigger, so that they could have a bigger leverage. USTR Lighthizer said that he's open to possibility of letting the tariffs go even higher. So things usually get worse before it gets better, and then usually, not always, but usually you have a dramatic agreement right before the deadline or right after deadline. So that's, they seem to be following that scenario more or less here. USTR Lighthizer is giving some pessimistic indications, while President Trump is giving some optimistic interpretations. As to when they will meet, American press is saying that both sides would like to meet right after President Trump's meeting with Kim Jong-un. And that's going to be at the end of February, so it's going to be probably at the very end of February or very early March. If both sides are fairly close together, then they'll probably just delay the implementation of the tariffs. But if both sides are still far apart, then they may just, the U.S. might decide to raise the tariffs.
When you talk about the deadline, let's look at that. So it's actually March 1st, the deadline. And so from March 2nd, the US, at the moment, they've said they're not going to delay this raising of tariffs, which is they're going to raise tariffs of $200 billion worth of Chinese goods from 10% to 25%. So do you think, I mean, is there an option to delay that? How difficult would it be? Or is it just up to the whim of the White House?
Well, President Trump delayed, give the 90-day delay for implementing the tariffs. The U.S. trade laws do give a lot of flexibility to the president and the executive branch. So if two sides were very close to agreement, then then I think to blow that by increasing the tariffs for a week or two and gaining the ire of Chinese public as well as American firms, I think that'll not be a very smart decision. On the other hand, if they were still far apart on some of these issues, then as USTR Lighthizer said, they were just perfectly willing to use higher tariffs as a bargaining tool.
You also mentioned the meeting with Kim Jong-un. That's at the moment scheduled for the late February, and Pompeo and Trump have both reiterated it the last couple of days. But we've seen it in the past before where meetings with North Korea can get delayed, things happen. What happens if it does get delayed? So do you think it'll be forced to delay this deadline as well?
I think they'll be flexible about it. If North Korea wants a delay that's more than a week, let's say, then they may, President Trump and Xi may have separate meetings, or they may schedule the meeting, China-U.S. meeting before the U.S.-North Korea meeting.
And something that's occurred to me as well, what happens if there's another U.S. shutdown like there was recently? Because at the moment, there's no deal to extend the federal government either at the moment.
Well, there's usually some emergency funds that they can use, and a lot of these high officials will probably have to work without a salary. But I don't see the shutdown specifically having that much problem arranging this meeting, because President Trump is putting a lot into the North Korean as well as the Chinese negotiations. So I don't think shutdown itself is going to be a problem for that. What I am a bit more worried about is that if the situation is delayed a bit more and the U.S. is scheduled for raising the debt limit, and if President Trump tries to use that as a negotiating tool for his wall, then that's going to cause a lot more problems than the shutdown. And if he does that, then the meeting could be up for grabs.
Just before these talks, the latest talks in Washington, it was announced that the U.S. had filed 13 criminal charges against the Chinese tech giant Huawei. And when asked about the matter, Trump said that they hadn't really been discussed in these talks. He in fact said, as long as it is as big as it may seem, it's actually very small compared to the overall deal. Would you agree with that assessment? And how do you think this Huawei situation plays into the current trade talks? Okay,
well, the Chinese public, I think, definitely do see the Huawei as part of the problem with the United States. But as far as using that, including that in the negotiation, I don't think the Chinese officials, as well as the U.S. officials, would like to do that. On the U.S. side, these type of criminal proceedings are supposed to be separate from trade proceedings. President Trump got into a lot of trouble because he had a tweet saying that, well, if U.S. and China could make an agreement, then perhaps he could be more merciful toward Huawei and Ms. Meng, who's right now in Canada in jail, on bail. But he got a lot of criticism from that because legally in the United States, the criminal issue and the trade issue has to be separate. And as you just mentioned, on the China side, Huawei is a big company, but still, in terms of total Chinese trade, Chinese economy, Huawei is still a very small part. So I don't think they would want to mix that issue with the trade negotiation.
So what comes next? I mean, what are we looking at now? There's a lot of uncertainty and it's making the global economy quite nervous. How long are we expecting these trade talks to continue, in your opinion?
Okay, well, they will definitely have to wait until President Trump and President Xi have their meeting. Both sides reiterated that no deal will be final until they talk with each other, which is a bit unusual because usually when you have a trade negotiation, the only thing the presidents show up for is the signing at the very end. Most of the technical details are actually worked out by experts well beforehand. But there does seem to be a possibility that they will be doing their own personal wheeling and dealing here. So it basically depends on when the meeting between President Trump and President Xi can be arranged. And that, as we mentioned before, is still a bit up to question.
US and China, obviously South Korea's biggest trade partners, so anything that happens between them will affect South Korea as well. So there are already signs that the dispute is having a negative impact on the South Korean economy. So what does South Korea do here at the moment? Is there anything they can do, or do we just wait for now?
Okay, well, just in terms of bilateral trade between Korea and China, I don't think we have that much choice other than to wait. About 45% of Korean GDP is exports, and of that, quarter of it goes to China. So the share of Chinese exports in Korea GDP is about 10–11%. So any reduction in Chinese economy due to the trade war or their economic slowdown is bound to have effect on Korean bilateral trade. But the U.S.-China trade war may not have as much effect as people fear. In Chinese GDP, exports are only about 20% of their GDP, and then of that 20%, exports to the United States, it's only about 20% of that. So altogether, maybe about 4% of GDP depends on exports to the United States. With this additional tariffs, maybe about 0.5 to 1% of the trade would be affected, the shock from China, at least from the trade war, may not be as big as people fear. From January to October last year, which is the latest figure that they have, the exports from China to the United States only fell by about 7%. So we may be overly frightened of the trade war, but there's another problem, which is economic slowdown in China, which is probably going to be a bigger problem. So we may be worried about the correct problem for the wrong reason.
One more thing we want to talk to you about before we go as well. So investors have been closely watching the U.S. Federal Reserve's announcement this week over whether it was going to raise interest rates at the central bank, as the central bank hinted last year. But in fact, they decided to hold it. They decided to keep it where it is. And they added that they will be patient in setting future adjustments. What effect does this holding have for everyone else, including Korea right now?
Okay, well, the effect just after the announcement was that the stock market and the bond market, because they also announced that they would reduce their selling of the government bonds that the Fed piled up during the quantitative easing they had during the global financial crisis aftermath. So at the very beginning, not raising the interest rate, keeping the sales of bonds low means that there's more room for Wall Street traders to maneuver, more chances of profitability. So the stock market went up, the bond market went up. But then I think they're looking at the longer picture now. Why did the Fed change their view so quickly and so much? They were saying that, well, just until about a month ago, they were saying maybe 2 increases this year. The United States economy is relatively healthy. It can stand a few more interest rate rises. But suddenly they said, we're going neutral. We're not going to raise it anymore. And there's even a possibility of going back to quantitative easing. So what changed? And I think that's making some analysts begin to get nervous.
And what about this overall effects that could happen to China, to South Korea as well? Because the South Korean, the Bank of Korea governor, he said this will help stabilize the financial markets. So isn't that good news for South Korea?
Well, more money is flowing into emerging markets over January because nobody expected the Fed to raise the rates. A lot of money has been flowing into the KOSPI stock markets in Korea, as well as the emerging markets. But now I think people are beginning to realize that, well, the Fed's change in point of view does mean that the global slowdown may be real. And so I think that's making more and more people nervous. And another problem is that over the last 15 years or so, the real economy and the financial sector doesn't really go hand in hand together. So whenever the economic outlook worsens, so the central bank reduces interest rates, stock market actually goes up. Having the financial market being stabilized doesn't always mean that the real economy will be stabilized. And for people who have jobs, for company owners, it's the real economy which matters more than the financial economy.
That's where we'll have to wrap it up. Thank you for coming in today and sharing us your insights as always.
Thank you.